Hey guys, this is Julian from the Binary Lab. I want to give you guys a little bit heads up on something that you may not know about. And honestly speaking, like for me, although I've been doing Forex for quite some time, it kind of slipped my mind that this thing actually happened. So I think about it, well, that kind of makes sense because many years ago, when I was using a little robot that's off the shelf available on ClickBank called the FAP Turbo, and what that did is that it used to trade the pre-Asian, like the New Zealand, Australian opening time, because it would basically anticipate big movements. It would place a small take profit and a big stop loss. So I want to show you what happened today. Today I was trading, oh gosh, this is so annoying. I was trading the head and shoulders pattern today, and basically, so this is what I was looking at, okay? So I was looking at, like, okay, we got left shoulder to head, and I was trying to trade the right side of the head to hereabouts, basically. So I got in my position at this part. Okay, I went in around about here. So I got in a very, very good position. As you can see, I had my initial target at roundabouts the 61.8, which is actually here. So it was not too many hours ago, but the annoying thing was that, at that point of time, the spreads were not what you see here. I have no idea. I would prepare it for maybe sometimes, yeah, the spreads would go up to like, 9, 10-ish, 13-ish. But at that point of time, and let me see if I can get you like some screenshots, okay? So I have a bunch of screenshots, in the wee hours in the morning, and these were just some positions. No, I didn't get, damn it, I didn't get the price, but you can check it out. The time was about, at the time, like 4:40, 4:39. AM for me would be PM. So it's the end of New York, alright? End of New York time, go check it out. And it's infuriating because my take profit was right there at the 57.78. But it just didn't trigger. But instead, I had a trading stop on because I thought, hey, my trade's been off a couple hours. I thought I better put a trading stop to protect it because it's been in profit for a couple hours in case there's some kind of a surprise. So I'll show you what happened just a little bit. I'll clean up my chart right now. This was what happened, alright? As you can see, this is the price. Shit, it went up that much. Oh gosh. What I got my TP2 even. So this was my TP1 and my stop loss, a trading stop set at 21 pips, right? It's here. Believe it or not, okay, at this point of time, my trading stop was triggered. So annoying because you know why? My entry was here. So annoying, so I got half my profit, half of my TP1. So annoying. So the lesson to be learned, okay, is that if your trade is if you're trading around that time, so like after between 4 and 5, could be between 4 and 6 p.m. New York time, or if you're in, so I'm in Bangkok, Thailand. This is between like 4 and 5 a.m., maybe 4 and 6 a.m. If you're in Singapore, that will be between 5 and 7 a.m. And you just need to be aware that, well, you could be awake at that time, but if you're going to be trading at that time, it's a very bad idea because the spread's going to work against you so much that, can you just imagine if it was like a FAP Turbo or something? In order to make the 3 pips or 4 pips profit, it's actually going to require a move of that plus, another 10, another 20 pips. That's a lot of movement for very small money. So I mean, what's the point? And if you're entering trades at a time, well, you may not want to do that. You want to wait till the spreads resume to normal. Like you see now, it's about 4 pips. It's not the best, but it's doable. Okay, and the mains about 2 pips. That's just about right. 2.5. That's just about right. But like earlier over here, I mean, what the heck? 20 pips? Are you serious? So I had a 20 pip spread. Okay, so just take note of that. And let's say if you have open trades and you're going into the end of New York, what you want to do is that you want to widen your trading stops. If you're using trading stops, you may just want to set it to like 30. Okay, if you're using 20, just add 10. If you're using 10, that's not even a good idea. If you're using a 10 pip trading stop, that's not going to do anything for you. I think you should go no less than 30 pips trading stop if your trades are still running at that time, or if you're satisfied with the price. If the spreads have not yet dropped, you can tell from here. Exit those positions so that you won't feel the pinch. If you're already in a nice profit, you won't want to give away the spread. Okay, so these are some tips. And by the way, if any of you wants to learn how to trade Forex and get huge rewards to risk, join my training group by following the links in the video description down below. I have weekly webinars and have daily case studies of trades that you can review and learn from really quick. And I guarantee that you'll be a better trader in no time. Bye for now. Good trading.